Hello, welcome to my presentation about the London 2 a.m. move. There's a lot being said about the London Silver Bullet, but I just wanted to give some examples of the 2 a.m. move because I've been tracking it for a while and there's so much opportunity in there. And I want to share that with you guys. Let's get into it. First example, that was today, 29th of September. Beautiful example, clear AMD accumulation right over here, and then we have the manipulation move. Right in between the yellow line is the macro indicated from 152.10, which obviously contains the 2 a.m. move, right? And you can see the move down right into a first presented fair value gap and then a distribution move to the upside, which was outside the macro. But if you can identify the manipulation move, there's really nothing that stops you from taking the distribution move, right? And exactly when it hit a first present fair value gap and most likely in other higher time frame PD array. So beautiful example of A and B situation and with the manipulation within the macro time. Let's get into the next example. Again, this example I'm using again a first present fair value gap of a different session. I do have a video on it on my channel if you want more information on it. But just for the sake, I just use them because I use them as a roadmap. In this situation, again, the 152.10 macro is indicated between the yellow lines, and at 152, we have a small little retracement into a fair value gap, and then it is a continuation move to the upside. If you leave the macro at 210, it hits another first presented fair value gap of a different session, but you could leave a runner all the way up to a higher time frame PD array. Yes, so you can extend the macros in continuation moves sometimes up to 5 minutes, but be careful because sometimes they don't run. But in this situation, you can clearly see it was running further on. Let's get to the next example. They just keep coming. Okay, 25th of September. Again, AMD situation. Accumulation, manipulation in the macro from 152.10, indicated between the yellow lines, and then distribution move. In this situation, I just used the fib levels on the manipulation, and as you can see, if you're not sure, you can always use them as extra confluence, and you can see the end of the distribution move that as -4 standard deviation. Most likely there was also high time frame PD array in this vicinity, but I don't have that indicated on this example. Let's get to the next example. Next example, 24th of September. This one I would not have taken. Why? Because you can see it is just hanging around in this fair value, in this first presented fair value gap of a session. Now, I don't know if you've noticed, it's the green one is the session that I use in the PM, New York PM session. So I've noticed that that's the one that is utilized a lot during this time. So keep that in mind. But as you can see, it just hangs around here. It just consolidates. It goes out of this here. And here at 2:30, it does do a little retest of this first present for very good, and then makes a move. But that's a different video, I guess. Now it's only about the 2 a.m. move, right? Next slide. So here again, we have a continuation example. And this continuation example is it's in an N walk, and it goes down from 110 to 115. It's already starting this move down. So let's say you miss this move and you just have to wait. And what you see happen here in this example between the yellow lines exactly is the 152.10 again. It retests the N walk, so it just hits it, but it doesn't go into it. So that means weakness, right? So you can just enter it here and just you can just write it down within the time. And as you can see in this example, again, the green one, so that is the first percentage per value gap of the New York PM session, it doesn't hit it here. It traces back and it goes into it at a later point. But you know what? Sometimes you just don't want to sit through this retracement. You just want to get out. So again, the most safest thing to do is to use the macro to its fullest and just get out when the time is done. Unless you're okay, you just want to sit through the time and you just let it run to another level. Let's get to the next example. So this example is also an example that I myself most likely would not have taken. It was last week. It was 19th of September. And here you can see it hits in between the yellow lines. It's the macro again. And, you can see it's consolidating, creating equal lows. And then it hits within a BC, right? And then within the macro, it goes up into another first percentage fair value gap. And again, a little bit of consolidation, and then it makes another move. A little bit higher. It doesn't go into the next first percentage fair value gap of a different session. It does take some liquidity, and there's a little tiny gap here, and that's it. I myself would not have taken it. It just seems a little bit too messy here in this area for me. But again, it is a move. It is a possibility. But I just wanted to point out with these examples how frequent they are, because this is just, for me, I'm just going back last week, today and last week, and maybe one day before that. So if you're interested in these moves and you trade London, start looking into them, because there's a lot of opportunity there. I do go over them during my London session if I am in the opportunity to start at 2 a.m. or a little bit before 2 a.m. So yeah, hope to see you there. And otherwise, I hope this video will give you some benefit, and you'll get something out of it. I'll see you in the next one. Bye bye.